Well, hello there, my friends. Chris Marcus here with you again for Arcadia Economics with an update on the nickel market. Fascinating situation that's become with a lot of similarities to the silver market dynamics. And certainly, we will see if there is a similar event in silver or any of the other metals. Palladium sure has been looking volatile lately, but in either case, the resolution is that the LME confirms price limits for nickel trading when the markets reopen on Wednesday. So, as reported last night, they are reopening Wednesday, and we have the first price caps. Well, I mean, I'm sure in some senses you've had price caps of different varieties, in minor senses, but that's really, as far as I can remember, the first overt commodity price caps since Nixon took us off the dollar in 1971 and announced price controls at the same time. And they were some whopping price controls. I mean, not just the size, but in Dick Cheney's autobiography, he actually talks about how they were determined because him and Rumsfeld and a bunch of other guys were just sitting in a room. They were debating. Remember, he actually used toupees and pickles were two of the things they were sitting there debating on how much it should go up. So they were managing the U.S. economy and like having these conversations where, Dick Cheney would be saying to Rumsfeld, hey, if you give me a couple basis points on pickles, then I'll give your constituents the toupee handout there. It was a complete clusterfuck, which is certainly what this thing has the potential to be. And let's read through the article so you can hear directly what is going on. Trading in nickel contracts on the London Metal Exchange will resume tomorrow after being suspended for over a week. LME has confirmed this will include daily upper and lower price limits to ensure future rallies reflect the underlying value of the metal. Well, if they're saying it can't go up more than a certain amount, isn't that guaranteeing that it doesn't have the ability to reflect it? What if there was a development in the nickel supplier demand equation that moved it up or above whatever that limit is, and that was the true underlying value? What if the limit, let's see what they said, 15% limit on daily price moves. So what if 20% of the supply falls offline? Or you have increasing global tensions, which have escalated to physical and military, in addition to financial and cyber attacks. What if that sparked things? The demand, and people were worried that they weren't going to get there is because supply chains are being shut down. So that's not really possible that that's going to ensure that future rallies reflect the underlying value of the metal. Why are they only concerned about the rally? What about the downside? Or is it just that they know there's so much paper used manipulatively to hammer it lower, kind of like what you saw in silver in 1980? We will see. Maybe Ross Benham will address some of these issues in his silver investigation report. But transactions were halted last Tuesday after prices doubled to record prices, peaking at over 100,000 per ton after a Chinese billionaire made a heavy bet against the metal, throwing the bourse into chaos. So basically, some guy made a massive short bet. Price went in his face, but JP Morgan was going to lose money unless he could pay his margin calls. So now they're putting price caps on. Sound about right? Yeah. Decision scrapped nearly $4 billion worth of trade. So the people who had seen there was a dislocation and got long, but they weren't going to get about if it went down, kind of like silver investors who see what's going on with the dollar. They just get pummeled by the same CFTC that's supposed to ensure integrity in the market. But here, these guys got their trades canceled. So again, any paper products, even mining shares, I mean, I like to think things would be okay, but in this Gestapo regime, I mean, I haven't done it yet, but it's on my list to, anything significant in terms of a mining stake. I don't know. Some of them you can register, get a certificate. I hope it doesn't come to that, but certainly, we're in this type of environment where here you see biggest fall ETN breaks, VXX halted multiple times as it soars. It's kind of diverging from the VIX in a non-mathematical way. So it sure seems like the storm's coming. I'm surprised that stocks are still up today. And Also, you have silver down 16 cents on the Kitco chart, although it was down quite a bit more. So that's why I love you, silver. You know, we get pounded. We're tough. We come back. Get past it. But back in the nickel market, following the bet and the suspension of trading, Tsingshan has reached a standstill agreement with a consortium of unidentified banks for a standby liquidity facility. Well, they were identified, including JP Morgan. Go figure that last night. Same guys that paid, well, were at least fined $920 million by the CFTC. We don't know if they ever actually paid it, but here they are turning up at the scene of the crime once again. Oh crap! What was Goldman was? Goldman. They were out there too today, commenting on the VX, the VXX. I don't know if they're a part of that one, but broken VXX now dragging everything lower. And isn't it amazing? Goldman Sachs, JP Morgan. There's Barclays showing up at the party again. Who knows the details, but you get the bigger picture. So that's, you know, we find out Goldman's involved in this before it's all said and done. Don't be surprised. And where were we? Yes, the unidentified banks. These are secured loans that a borrower can use in part or full when needed, period, to tie over while it sorts out the margin settlement obligations on the LME, which include violating active agreed upon contracts. Confirmed by LME, noted large client of the market has now published details relating to the supportive consortium, which could suggest the potential for further disorderly conditions may be mitigated. We'll see how that goes. Controls were foreshadowed by LME Chief Executive Matthew Chamberlain. He told Times Radio he would definitely consider whether the LME would limit short selling following the debacle, despite previous pushback from sellers about potentially more supervision in the market. So he managed to say that I'm reserving my right to change the rules at any point in time. And I wonder if he'll comment on it at the Boca Raton Futures Conference to the banks, unlike the constituents for Ross Benham of the CFTC. But you're seeing a lot of similar themes here. And again, I'm not going to go through this one, but just the idea that things are happening out there. I mean, there's a lot of lying and covering up. But you also hear that Lehman moment term popping up a lot. And I think that's not just off the reservation talk. So anyway, now that we have price controls, I was thinking how exciting this is. Because the LME is also requiring traders' nickel positions to be reported. And I was thinking, gee, that would be great. Can we have that position reporting rule implemented for JP Morgan and Goldman Sachs and silver, so that when they go over the limit, which I believe they are, I believe JP Morgan's over the position limit again this month in silver. Deliveries continuing, a few hundred more each day. And again, Bart Chilton, former CFTC commissioner, in the book I wrote called The Big Silver Short, available on arcadiaeconomics.com, paperback or audio. But he talked about how JP Morgan had a position, was over the limit, and he told them to make it smaller, but they made their position bigger. And this was the same time silver was plummeting from $21 to $8, $9 in 2008, as there was a physical shortage. So we've already seen this happen before in silver, just like we're seeing it happen in nickel. And of course, the regulators. Now, I know I'm critical on them, and maybe you're out there saying, geez, why is this guy always picking on the CFTC so much? But I will be happy to show you right now, and check this out. This is from the Hunt Brothers and Silver Thursday back in 1980, when they were changing the rules so that people had made reckless short bets, kind of like Jeff Christian of CPM Group. In fact, at least according to Paul Sarnoff and Jerome Smith, who sound a lot smarter than Jeff, they say that Jay Aaron, which was the offshoot of Goldman Sachs, was actually one of the banks short in 1980 as well, which would kind of invalidate not like there was much integrity in what Jeff says, but anyway, just take a listen and also see how things were handled. I might comment a little bit, but wanted to share this one and think you will find it interesting.
I'm not doing anybody else's business. I will not do it.
Then, on March the 27th, Black Thursday they're calling it, the market nosedived. The price dropped to just over $10 an ounce, and the Hunt Syndicate lost well over $2 billion that day in paper profits.
one quick note here. I did notice someone on Twitter mention that isn't it interesting that ever since the nickel market shut down, I believe it was the same day gold hit by some measures, a new all-time high of 2071 or 2077. And this fellow was saying, isn't it interesting that the same day they shut the nickel market down, all the precious metals have gotten pretty hammered since then. And I think we're left with a dynamic in that this could go a variety of different ways with nickel or any of these commodities where you see the banks are going to continue hammering it down. And sometimes it's like, geez, what will end this? I mean, we're in the midst of shortages for many of them, but just things to keep in mind and try and navigate this. So let's continue on.
What had happened was that Beish, Hunt's principal broker, had asked their client for more cash to cover the debts he had built up during his buying spree. Beish was in danger because of the market practice of buying silver on credit, on margin as it's called. If the price falls, the broker demands more money or margin to cover himself. When Bunker Hunt ignored the margin call, Beish sent one of their men down to Washington to the CFTC, the Commodity Futures Trading Commission, set up in 1975 to police the market. Elliot J. Smith, a Beish director, asked the CFTC either to close down the market to give them time to recover, or force Hunt to settle out his contracts.
My interview,
And I got to stop here again because I understand, when you have these situations that people make deals and that's perhaps the nature of trading. Yet once again, this points out that what the actual commodity has lost complete touch. We're not talking about supply and demand of silver. It's always supply and demand of futures contracts. I listened to Jeff Christian's new bizarre video about the Ides of March today, which, if you have time, it's worth checking out. But you might have better things to do, hopefully, than that, such as watching Ned Price. Oh, this guy's a legend. Wait till you see him avoid answering any direct questions about anything. So you might want to watch that instead of Jeff Christian, although Jeff's video is pretty wild. And again, he mentions how he's like, well, all these people out there, wackadoos like Keith Neumeyer who are talking about triple digit silver, they're worried about the COMEX blowing up, but that's never going to happen because they just roll the contracts over. Well, I agree. There's truth to that, and that's the whole point. You have Keith Neumeyer actually has to go get the darn silver out of the ground. And everyone who looks at supply and demand says, well, physical silver is going to cost more. COMEX contracts, SLV shares may or may not. And that shows you how detached these things are. And if you want proof that I'm not just winging it here, that has been going on for the last at least 42 years, and obviously a lot longer than that, let's hear Elliot Smith of Beish finish it off before he passes the baton to the Ross Benham of the 1980s. This is so special. I've been saving this. I'm still trying to go on vacation this week, but anyway, here we go.
Discussion with the staff members of the CFTC and with the commissioners. They advised me that they might consider stopping trading for 2 or 3 days and let the markets.
I know I was talking, so I'll rewind that. But the CFT, this is a broker saying the CFTC told them we might stop trading for a couple of days.
Or discussion with the staff members of the CFTC and with the commission. They advised me that they might consider stopping trading for 2 or 3 days and let the market settle down, but they would not in any way settle out the contracts.
He says they might consider. So they gave at least one market participant information, as vague as it may be, which probably they didn't. I mean, we didn't have the internet back then. So I'm guessing most other market participants weren't getting this free market information and all that stuff that is promised by the mission statements of the CFTC.
They advised me that morning that they had word from the Bank of England that if they stopped trading, it would be considered by the European market as a very bearish point of view.
So even back in 1980, the CFTC was the Bank of England's bitch. and the Ross Benham of that day was answering to the Queen, not supply and demand of the silver market. Okay, we got that clear. Ross, if you're watching, is that clear yet? I understand you're no different, and you probably think you're a hero in the CFTC halls. Although here's a good story. I actually I can get someone from the CFTC's whistleblower line, like the person who answers the phone. She actually does call me back, and I was talking to her, and I, was explaining, I've been trying to get an answer if they've seen the stuff, if they reviewed, if they're going to do anything. And, she was friendly. I mean, she's saying, hey, I'll, you told me the options I could do or the number I can call. And I said, just by the way, like, you wherever, who Bart Chilton was? And she's like, yeah, I remember Bart. And I'm like, do you know that he actually confirmed this thing was rigged before he passed away? She's like, oh, no, I hadn't heard that. I'm like, have you ever heard anyone at the CFTC mention that? Oh, no. I'm like, well, the interview's on my YouTube channel and website if you want to watch it. And it was kind of like, I don't know. It just seems like if you're working there, maybe, and you hear that and you hear that I've submitted evidence and the crime's ongoing again, that someone would care. It was like she was polite and nice, but I didn't get the feeling that she was going to actually watch it and say, holy crap, maybe this guy's actually talking about something that's left people at risk and should be noted. But it's not surprising. What was that, 2 or 3 years ago? I mean, you see the same thing. This is their policy. This is their market policy to serve the banks. Here they were serving the Bank of England back in 1980. well, we'll play that one again. I mean, it's so amazing. They sit there and lie to your face, swear an oath to the allegiance, swear in, whatever they do. And then you find out this one, I don't know, maybe some of you have seen it, but you find out 42 years later or a couple months after Silver Squeeze what they're really doing.
They advised me that morning that they had word from the Bank of England that if they stopped trading, it would be considered by the European market as a very bearish point of view.
What the bank...
No, I thought CFTC was serving U.S. citizens, not the Queen and the British banks. Well, I mean, I used to think that. I haven't thought that for a while, but we'll finish up here.
Was telling the CFTC in no uncertain terms was that by closing the silver market, they risked a major financial collapse on both sides of the Atlantic. As it turned out, the Commission decided to do nothing and let Beige take their chance when business started the following day.
There we go.
The situation was serious, potentially grave. But there's a philosophical line that has to be drawn. The CFTC is here to protect small customers and commercial users of the commodities markets. It is not here to protect...
Whoa! What did you say there, big boy? The CFTC is here to protect who? And it's not here to protect who? Wow. Ross Benham must have grown up to this guy's baseball card and poster on his wall. Yeah, fucking great.
There's a philosophical line that has to be drawn. The CFTC is here to protect small customers and commercial users of the commodities markets.
They didn't do that in 1980. They didn't do it 2021. They didn't do it today. They didn't do it yesterday. They're never going to do it. So he's lying, just like Benham.
Here to protect large speculators and the brokerage houses that seek their business.
All right, James, you still alive, bro? You want to debate evidence with me of what happened in 1980? I was 2 years old then, and I'll run circles around you. In fact, right now I'm reading a book by Jeffrey Williams called Manipulation on Trial, which goes into the 1988 case against the Hunt brothers that was actually brought by a Peruvian marketing metals agency, not even by the U.S. government. They were like the metals focus of their day, and they were pissed off because their guy pulled a big shot in the nickel where they thought the price of silver was too high. So they wrote too many paper contracts, blew up in their face. They got lost. So they sued the Hunt brothers. And in this book, I mean, I'll share a page that was particularly stunning because it shows some of the similarities of what was happening with the Soviet Union and Afghanistan and the US back in 1979, which was one of the driving factors. Yet the logic they used to pin this on the Hunt brothers, I mean, this guy's detailing what a circus it was, how, I mean, it was so arbitrary but it's great. At least there's a precedent. So I'll find some way that Benham and JP Morgan have violated what was set as law back then. It's not hard to do, especially when you have James here. You know, they tell you the truth sometimes when they just think that you'll think that's okay and not notice the small differences.
Protect small customers and commercial users of the commodities markets. It is not here to protect large speculators and the brokerage houses that seek their business. That's
Well, it protected the people who were short back then, like Jay Aaron and Scotia Makata, what's his face, Jarecki. It seems like I'll bet Jeff knows Dr. Jarecki. They seem like they'd be buddies. Jeff Curry, I wonder if Jeff Curry knows Dr. Henry Jarecki. I think it was Henry. I've talked to David Morgan about him. I won't speak for David on this one, but at least from my studies of the great doctor.
closing would have done.
How far do you think this whole affair has damaged the confidence of the people that you seek to protect, the small investors, in commodity trading here in the United
Investors,
States?
they're protecting.
I would say that it has made people far more aware of the speculative, sometimes dangerously speculative nature of these markets. It will therefore make them more cautious. The lesson is probably all to the good in that respect.
But could it happen again?
It could conceivably happen again. I don't think the tools we had available were strong enough to stop it. I think those tools should be put in place so it can't happen again. We can't take a risk that something which comes out of simply a desire for excessive speculation is going to tear the financial fabric of the United States. We cannot take that risk again.
Well, that's exactly the risk that they've left us at. And they have the biggest tool in the entire tool shed in the form of Ralston Benham, who's just suppressed. I mean, he's not just suppressed the evidence. He's helped drive the car, the getaway car. In fact, he even came in for the bank robbery so he could high five the Jeffy brothers during the middle of it. And they're talking about how, you know, could this ever happen again?
The tools we
Sure.
have.
And what have they done? They've guaranteed that it would happen again, that as few people would be prepared unless, you know, people, you know, the silver bugs talk about it and take shit from everyone who's, oh, why are you always talking about silver? Otherwise, there'd be even more people who are about to get clobbered while the banks just take the money, can't even do anything with it productively and melt down society as possible. So let's hear this guy one more time. And you think about, as you're hearing him speak, if you feel if you're a retail investor and not one of the big, if you don't own BlackRock or JP Morgan or Goldman, how you feel about the CFTC now hearing the same lame game they were throwing out there back in 1980.
Were strong enough to stop it. I think those tools should be put in place so it can't happen again. We can't take a risk that something which comes out of simply a desire for excessive speculation is going to tear the financial fabric of the United States. We cannot take that risk again.
I would buy about 200 lots at $8.50.
Can't take the risk. Give me a break, buddy. You guys guaranteed it. So with that said, let's see anything doing in the old silver market as we are approaching 10 minutes before the close. Well, you know, it's higher than it was this morning. So there's the positive. In the end, you know, more money is going to be printed, regardless of if Jerome Powell actually says that they're going to raise interest rates. Was he going to raise interest rates a quarter point? They really pull any money away. I mean, then the exchange stabilization fund wouldn't even be able to prop up the stock market. So, you know, perhaps I think a lot of people watching this show already know that, but for anyone who's new, feel free to think that one through, and you can go watch Jeff Christian now, or I'm going to watch Ned Price. And oh my goodness, I just was noticing this now, in case anyone was wondering, I was at least thrilled with day one of the New York Jets free agency signing period. Now seeing they got a cornerback, DJ Reed. I'm not familiar with him, but hopefully my man, John B of Gangrene Nation has covered that. That's my favorite Jet podcast. There's a couple I like. I like Rich Smeeney too. And, but John B, I can't wait to hear his take on it. I love my Jets. I love our free agency signing. So I'm going to go check that out. Hope you're having fun out there. Hope your team is doing well, and enjoy the price controls. And keep in mind, you're going to see a lot of headlines float back and forth, but a great time to see the example of the law of unintended consequences. I mean, there's a lot of things they'll try, and sometimes they do work, but there's that eventual point where it blows up in their face. We'll see which day that is, but thanks for being here. Hit the share button if you enjoyed this, and I'll keep you posted. Who knows what'll happen tomorrow? LME opening and a Fed meeting. So I will see you again soon either way. Thanks a lot.